Hello traders. In this podcast video, I would like to address to the new trader, the newbie trader, the novice, anyone that doesn't have any experience at all in Forex, or even just to the trader that is starting off but has maybe a little bit of experience, all the way up to the experienced trader can probably relate to some of the things I'm saying. You've probably listened to our video, our podcast on why we are so against paying for education, why education companies are a waste of time and money, mostly money, and really what you can do to get started, how to use your time the best to learn Forex, to learn what this is all about. And I just would like to give some free tips and pointers to anyone starting off or anyone out there, just to really shave off the learning curve and shave off the time it takes to at least have an understanding of this. To just be a true pro will take years and years, and that's being realistic with you. You know, you can't learn this in a month and expect to make millions of dollars. It's just not going to happen. But you can at least have an understanding and go in the right direction and get better and better as the days progress. And that's what you should aim for. So, if I could recommend the steps involved that will help immensely, let's just dive into it. Number one, most important, supersedes everything out there, money management. In Forex, we're trading a currency pair, and we're saying it's going to go up or down. That's really all there is to it. You are betting that a trade is going to go up or it's going to go down. You have a 50-50 chance, technically, flip a coin, it's going to go up or down. And that's really what Forex is. If you're right and it goes up, you make money. If you're wrong and it goes down, you lose money. Now, there's a lot more to it than that. How much you're trading, there's spreads, there's broker commission, there's a lot more than just that. But that's the simplistic version, that you can trade a currency pair and you're trading either buy or sell. And it's really just that. So money management is what allows you to keep an account balance, not blow your account up, not burn through all your money. So if you've got good money management, if you're not risking more than 1% to 2% per trade, please see our video on that. We have another video on money management. If you can get your money management right, where you're not risking too much per trade, this is what's going to allow you to be a novice trader to an intermediate to an expert without blowing your accounts up. Every trader, or most every trader that comes to us that has blown their accounts up over and over and over again, using bad signal providers, using rogue companies, education companies that are charging them money and don't provide service, all of these things are just kind of the industry that we're in. But if you have good money management, a lot of times you can still weather the storm and understand what it takes to become a trader without blowing your account up if you just have money management or proper money management. The traders that come to us that have blown their accounts up, really, if you've got bad signals or you're working with companies that don't know what they're doing, if you still had money management in place or proper money management, technically you still have about a 50-50 if you manage your money correctly. So I would say the very first point that you want to learn as a trader before anything else, before you even hit the charts or anything, is understand how to trade 1% to 2% per trade. If you're new, 0.5%, 0.25% per trade is what you should be doing. Get a demo account with any broker and just place trades. You can just flip a coin, buy or sell, and understand, get it so that your money management is correct. If you open up a demo account with 10 grand, make each of your trades, your stop loss should be based at 1% or 0.5%, whatever you're going to use, but you should get this aspect down perfectly. And you can use demo accounts with any broker on MetaTrader 4. Just get your money management straightened out, perfect. Don't deviate from it. And when you get this point, you are ahead of the game. You are more experienced, better off than 75% of the traders. And I know that seems like a very high number, but think of it, guys and gals. If 95% of all traders out there are going to lose money in Forex, why is that happening? We are in basically a 50-50 game of a trade going up and down on a currency pair. Again, there are more points to this, but if your money management is correct, then even if you do blow your account up, it's going to take you a year. It's going to take you a long time to blow it up if you're trading 1/4% or 0.5% per trade, no matter where you're getting your trades from. You can shut your eyes and trade, buy or sell, but with good money management, it's going to be difficult to blow your account up. As long as you have good money management, your risk to reward on trades are correct, and so forth. It's when a trader doesn't understand this point and they trade 5% risk, 10%, 50%, 25% risk on a trade, this is how you blow your account up. So first and foremost, when you're getting into the Forex trading market, when you're learning this, when you're getting started, the most important part, I can't stress enough, is money management. If you get this part down, it's going to be much more difficult to blow that account up and to lose big amounts of money if you understand risk and money management. So that's number one. Number two is support and resistance. I don't have enough time to go into this. This takes a long time to explain, but there are thousands of YouTube videos. Do a YouTube search for Forex support and resistance. Understand what makes up support and resistance. This is really the first step of trading. After you understand and you get your money management correct, you will have support zones and resistance zones, and trades will break above and beyond these points. And this is just a really main point to learn how to trade support and resistance. And again, I don't have enough time to go into all of these things. There's a lot to it, but it's very straightforward. It's support and resistance. YouTube it. There's thousands of videos on this. Take a look at support and resistance as step number two. There are hundreds and hundreds and hundreds of steps. I'm just giving you the main steps. If you understand these points, I'm telling you, you're going to be 85, 90% ahead of the game when you can just cut out all of the noise that's out there. Step number three, you've conquered money management. You've conquered support and resistance. Number three is what we call a top-down approach. Whenever you trade a market, a currency pair, you should take a look at what the higher time frames are doing. Most traders do not do this. Unbelievably, they don't do this. So when they trade, they're trading at what they can see on their screen in the time frame that they're trading, which is usually a 5 or a 15-minute time frame, or even a 1-minute time frame. They're just trading based on what they see in these lower time frames. Use the top-down approach. Look at the daily, the weekly, the monthly, the 4-hour, the hourly. See what's going on in the bigger picture. If you don't know, or you don't look at what's really going on in the bigger picture, and this goes hand in hand with support and resistance, you can see what's happening on the higher time frames and see what major support and resistance zones there are. When you use the lower time frames for your trade entry, this will help you immensely. You will have the full and complete picture, which way the market is going, why it's going this way, are we close to a support and resistance zone that we need to be aware of, all of these things. But you would not know this if you don't look at the higher time frames. Again, I'm giving you a very simplistic version, but if you follow these 3 steps and you master these 3 steps, your trading journey will be much, much easier, and you will find that you will avoid so many pitfalls and problems that traders or new traders have that go on these, these never-ending journeys to learn things that really don't matter or that don't benefit you. If I could just give you guys a few more pointers, these are not necessarily my first 3 main picks, but there is no magic formula. I've talked about this in previous videos. There's no magic pill. There is no one way to trade that is going to be the end-all, hear-all that wins 100% of the time and makes money. There's not going to be some magic indicator, no matter how much hype goes around it. There is no indicator out there that gives you this unfair advantage. We talk about unfair advantage in our website, as you can actually see on the screen, but we have thousands of points making up this. We have traders that analyze the market. We have techs that build expert advisors. We have lots and lots of things that help us do that. It's a culmination. It's a bunch of things. You're not going to have one indicator that's going to just, tell you 99% accuracy, this is what's going to work. Don't rely on an indicator. Don't rely on one specific point to make you money or to make you successful in Forex. Forex is a journey. It's putting a bunch of things together and trading smart, trading with good money management, understanding support and resistance, understanding what the bigger time frames are doing, and putting all of these things together in your toolbox, so to speak, and then making an educated decision and placing a trade where the market's going to go, or you predict the market is going to go, as a entry and an exit point. So I hope this has helped shed some light. Again, I want to stress, this is very simplistic approach. I'm just giving you the new or the novice trader 3 just main points that surely would have saved me thousands, tens of thousands of man hours in my journey. But if you can just avoid the pitfalls and you can skip ahead and start with these 3 points, you will be so far better off than by not learning or mastering these 3 points. As I always say, leave your comments below. I'm happy to answer any emails. If you guys want to shoot us an email, we're always here to help. But I do read the comments, and I'd like to hear what you guys have to say. Thanks a lot, traders. Take care.